fascinating story of how Naspers transformed itself from a traditional print media company 30 years ago. Curious about these recent share sales. Why did you think you needed these billions of dollars now to build the Naspers of the future?
Thanks a lot for having me, Emily. So the main reason why we freed up more capital is really driven by opportunity. So we've been focusing, building our e-commerce business in classifieds and in payments and in online food delivery, and we're getting to some scale, and we realized there's so much further opportunity for us to pursue. And we really wanted to shore up the balance sheet and give us the capacity to do that. Sort of to repeat that model of finding a great business, finding a great entrepreneur, putting our backing behind them and making a great company grow.
Well, to walk away from even a small stake in Tencent is a little bit risky given how fast the company continues to grow. Where do you plan to put this money? Where do you see that opportunity?
Yeah, so what we see basically in, of course, Tencent is an amazing company, probably one of the most impressive growth stories anywhere in the world today. But what we also see is that we've managed to build excellent businesses in 120 countries in the internet, and we're just not done. And we realize that if we continue to be looking for the right entrepreneurs, we find them, we actually trust them, we give them a lot of runway, we can actually do this again and again. And a good example is what we've done with Flipkart in India, where we've also found an opportunity really early. And we backed a founder that was in 2007 in India looking at an e-commerce dream, wanting to build this great e-tail business while there were no credit cards, there was no logistics, there was no structured retail. We backed him from early on, and he's made something great happen, and that's what we do.
You bought that small stake in Tencent back in 2001. It's now worth upwards of $150 billion. I'm sure there's been some fascinating drama over the years, whether to get into games or e-commerce. You've been ringside for all of this, and I'm curious if you could share a little bit more about your shared history. What's it been like to be on the front lines of Tencent's growth?
No, it's been a fantastic ride, and as I said, it's probably the company that is run by the most incredible leadership team in the world. And I think what they've done structurally well is they care about their customers. They start with their customers, they start with technology, and they've been basically taking a view on what is the best possible product we can offer. And that's very much what we do as well in our other investments. We find these entrepreneurs with a extreme product and customer focus, and we back them. I think Tencent is by far the best example of doing that, but that's fundamentally what we do in Naspers.
Your stake in Tencent is now worth more than Naspers overall, and your performance has largely mirrored Tencent's. What is your strategy to close that gap?
Yeah, no, we are, of course, a company that's quite diversified. So you would expect a certain discount to be for us normal to trade at. I think for us there are some structural other factors that make our lives a little different from others. But fundamentally, what we are focused on doing is find these great entrepreneurs that build great businesses. And actually, the last set of results are a good example where we've seen very strong growth in our e-commerce business, growing at close to 40%, accelerating year over year, and our core e-commerce investment classified turning profitable. So building great businesses, that's really what we do.
So you've said you look at listing some business units individually. Curious, which of your businesses do you think are listing ready?
Yeah, I think at this point in time, we're just looking at a broad set of options on which businesses actually can help us over time to unlock this value. And look, there's a broad set of options we have. We've done it many times in the past, right? For example, we invested in a online food delivery business called Delivery Hero. A while ago, that company went public and has been on a fantastic ride. So we actually look at it all the time. We look at which businesses would be better off if we would take them to a public situation, and we make those choices.
But can you give us any more insight on what kinds of structural changes you're considering, and when these businesses could be listed and where?
Yeah, no, it's if you look at the company where it is today, and the questions that we face, what we really want to do is take a step back, and when you make changes to the structure of your company, you want them to last. And you don't want it to be short term. And that's the process we're in at the moment. We look at a number of structural options, which could be listings, it could also be other structural changes in the portfolio. We're not at a time where we can talk about it, but we'll get back to you on that.
So Naspers is the biggest pay TV operator in Africa, but the business hasn't been doing that well, as others, including Netflix, are entering the market. Is that a business that you would consider selling? And if not, what are the plans for it?
Yeah, if you are familiar with the situation in sub-Saharan Africa, the continent's had a very tough time, right? Currencies have struggled, and as a result, our business has had a tough time as well. I think this year we actually managed to increase the profitability of our video entertainment business substantially, and it's really on the back of a turnaround program that we've been running for the last 2 years, which is really around getting a broader subscriber base and also reducing our costs. So that's working well, and we're very focused on continuing that. At the same time, even though internet penetration is considerably lower in Africa, and will take some time before everybody has access to great broadband, we do want to be ready for those changes in consumer habits. So we've launched a video-on-demand business called Showmax, which has grown tremendously on the continent. It provides great local content that people love. Around the continent, people love looking at their local soaps in their local languages. Uptake's been great, and I think we'll do a whole lot more about that.
Now, one of the strongest parts of your non-Tencent business is classifieds, people basically selling their old stuff, where you are now competing with Facebook Marketplace. Facebook obviously has the benefit of scale. They don't need to spend that much to attract new customers. How concerned are you about the threat of Facebook?
Yeah, nobody should underestimate Facebook. But what we've seen in the last few years, actually, if I take a step back to about two and a half years ago, we had this amazing entrepreneur called Alex Oxenford, who we knew from before. We invested in his company before, who came to me and he said, Bob, I can build a business in the US to be the most vibrant trading place for used goods. And since we knew he'd done it before, we listened carefully, and we backed him. And actually, if you look what happened in the last year, Letgo, that's the company involved, it was the second fastest growing app in the United States in any category. They have now approximately 100 million installs. They have been selling 400 million items in the United States, and that's just after 2 years. So they're clearly on an amazing path to change the way that Americans trade their secondhand goods, and I think it's an amazing story.
So obviously you're still figuring out what to do with all that cash, but you've had major success in China and in India. What regions or sectors in particular are you most intrigued by?
We are very excited about India as an investment sector. Now, you know that at this point in time already, based on mobile internet, India is the second largest internet market in the world, just after China. And if you look at the further potential of smartphone growth in India, we think that the online population could still double, and at some stage could catch up to the same unparalleled levels where China is today. And that amazing growth of addressable market is what really excites us about India. And what we've also noticed, that Indian entrepreneurs are tenacious, and they have great ideas and aspirations. I think in Flipkart we found a great example. We've also seen other great businesses there. For example, we invested in a online food delivery business called Swiggy, which again is seeing that explosive growth driven by a large market, a big universal need that this business is addressing, and a great entrepreneur that runs with it.
Do you think you can ever top the success of Tencent?
So it's a great question. I think if you look at the history of internet investing, I don't think there is another company that delivered a similar return as that investment. So if that's the benchmark, I think everybody's failed so far. But I think the model of finding a sort of an exceptional group of people that have a real vision to build an amazing business, that's what we do all the time. And I think there is where you're going to see more of us.
And going forward, how do you expect to continue to advise Tencent, what would you like to see them do and not do when it comes to expanding into new markets?
So if you look at the position that Tencent has in the market, I think there's a lot of reason to be excited about what they've been doing. Right? As I mentioned before, what I fundamentally like is how customer and product focused they are. And if you take that approach where you have an obsession with doing the right thing, you take the largest internet market in the world, and with their starting position and their ambition, but also their willingness to invest in other internet companies, right? So they have this amazing ecosystem of companies they support with their Weixin model, and that actually have very large businesses in their own right. I think there's where we get really excited for the future.